We just got off the Legends Masterclass panel, where the room becomes a classroom, and people can ask retired CIOs questions about today's management, governance, economy. It's under Chatham House rules. But here is Tom Tull. He ran businesses, and he's also the former CIO of Texas ERS. Tom, what wisdom would you apply to this economy from what you've lived through?
Be cautious, be open-minded, and be creative. What I would do today in the current environment. I see a lot of similarities, or even call them rhymes, with what we went through back in the 70s and the early 80s with stagflation, with political demands and constraints, not to mention the changing rules of engagement with respect to the different markets and the different asset classes that we're working with today. Concerns are that we really haven't had a good correction for some time. And I think we're overdue, at least for pullbacks. And accordingly, I think it's an environment where you have to give more consideration to rebalancing, taking advantage of opportunities. Really, everybody hates real estate, so it's a great place to begin to spend more efforts. Infrastructure, I think, is going to be paramount as we continue to go forward. And in a conference, we talked about water, which I think is going to be another asset class within the infrastructure base, which offers tremendous opportunities as we go forward. And then finally, there's been very little talk about the non-U.S. markets. We're just beginning to see the emerging markets show more signs of life. Most people really don't recognize the fact that the emerging markets, and granted a lot of part of it's China, but they represent the majority of our world population. The U.S. is granted a very significant share of the total GDP, but it is and the market is very, very large, but the emerging markets and the international markets are still fairly small in the scheme of things, and they offer a lot of opportunity. And finally, the other side of that is as the dollar continues to, let's hope not depreciate dramatically, but given our debt levels, continues to be under pressure, you may see more diversification away from the dollar, which provides another opportunity to look at the international markets.
Fantastic. So people should be rebalancing, but how often? I know you said often. How often?
Okay. I think that's a great question. I think it should be ongoing. It shouldn't be something that you do on a quarterly basis. It depends on the asset class. If you have stocks that have moved tremendously, you need to start peeling off or utilize derivatives, whether it's puts or calls, depending on where you are in the marketplace, or futures, using hedge funds, but definitely cutting back on some of your risk in the areas that run too far and seem overvalued, but at the same time spending time on the asset classes that have been ignored, the orphans, like the emerging markets, or I think infrastructure is going to get more involvement. I also think that given what we're seeing in the credit space, particularly the zombie debt issues, we'll have an opportunity to see the opportunistic credit firms get more actively involved, even though some folks are saying, credit is an overdone trade. I think there's pieces of the credit market, particularly on the opportunistic side, that offer tremendous rates of return if you have the time, people, and effort to pick and choose among the spaces, whether it's U.S. or international.
Right. And how has the conference been for you so far?
It has been great. It's been interesting to touch base with a lot of folks that I've worked with or seen in the past. A lot of great viewpoints in terms of different asset classes, as well as, of course, AI. Everything has to have AI somewhere, some way, shape, or form. But I think it's been a very comprehensive conference, tremendous attendance, and also tremendous questions in the process.
Thank you for being here.
My pleasure. Anytime.